Ladies and gentlemen, unprecedented times, and I'm glad that Egon von Greyerz is back from the southern hemisphere paradise to where are you, Egon, and how are you in this Corona insane time?
Yes, thank you. I'm in the Swiss Alps in Zermatt, where the Matterhorn is, where the name of the company came from, so this is a good place to for self-isolating because obviously there are no tourists here anymore. So I'm good. It's a good atmosphere, good air, mountain air, and thank you. I'm well, and I hope you are too.
Yes, I am. It's a crazy situation, and you have to adjust your all-day life. But so far, it works quite nicely. Egon, when we talked the last time, the Dow Jones was around 23,000 and something points. It went down to 18,000. It is now back up to 23,000 and something because of the stimulus that was announced by the Federal Reserve. They create 2.3 or so trillion new money. They even buy subprime, I call it subprime, or low-graded debt. So they start monetizing anything, and it seems for now that this is keeping the markets in a bit more up than it should be, but who knows? I feel there is another leg down in the cards. What's your impression of the current market behavior?
Jan, well, you know, I was very clear about what was going to happen, and I said that in January that I expect the crash to start sometime late January or in February. And so we've seen the first leg down, as you just pointed out, from 29,500 to 18,000 something. And now we're seeing a correction, and we're seeing a typical 50% correction we've seen of the first fall. That's just a correction. We are in what we call a secular bear market, a long-term bear market. And so the next leg, I think, you know, regardless of how many corona cases will be reported, and the next leg down is coming. I think it could come this week or probably in the next couple of weeks. And that will be down to new lows again. And the pressure will always be on the downside, but it'll never be a straight line. There'll be volatility. But we're now starting, sadly, a period of recession that will lead to a depression for the world. You know, that's the inevitable end to a very long period of bubbles, asset bubbles, credit bubbles, stock market bubbles, property market bubbles, etc. So as we have discussed before, Jan, this is the end, at least of a 200-year period. The way I look at it, this is this is going to be worse than the 30s depression, 1930s depression. We might have to go down to back to the 1700s to see the beginning of this cycle, or it could be even a longer cycle. Only historians will know and write about this afterwards. But it's a fact that you know, the heavily indebted world will now have to go through a severe correction that will affect us all in coming years, in quite a few years, I think.
Egon, the headline of this video will probably be, but I'm not sure yet, that the numbers explode and the zeros will follow. We talked about this Fed creating money creating madness a number of times, and I show to our audience some numbers. I also had prepared a chart of the unemployment statistics in the US, which is also unseen in the past. But let's go to the Fed chart, which shows exactly what we were expecting for many months. And here it comes. Here you go. There is the Fed balance sheet. It's the current numbers. It's now at 6 point something trillion. We talked about this tapering, this small tapering episode, and now with the Corona emergency measures, it's going to the roof, exactly as you and some others, not too many, predicted for a long time.
Yeah, so you know, from the low in the autumn of 2019, we have gone from 3.8 trillion to almost 6 trillion now, And this is just the beginning, Jan. This will continue to explode, not just the Fed balance sheet, but every single central bank's balance sheet. And you know, where it will end, who knows? But you know, I have recent articles and discussion talked about, I see hyperinflationary depression coming. Maybe we can talk more about that next time. But the, you know, many people think that it can't be hyperinflation, but we have no demand. There's no people don't have any money. Everything is shut down, and there can't be hyperinflation. But most people don't understand this. But the people who remember the Weimar Republic or read about it, they should know that hyperinflation doesn't come from high demand. It comes from the currency collapsing. And the currency collapses because just what we saw there on the Fed balance sheet or on the EU balance sheet, because governments and central banks are printing unlimited amounts of money. And that's what's going to happen. And that leads to currencies collapsing, and that leads to hyperinflation. Nothing to do with the high demand for products or goods or services. And that was what I expect next. You know, you just take the US. I mean, it was just totally predictable. The US debt has doubled every 8 years since Reagan, at least since Reagan, 1981. Every 8 years. And I forecast already when Trump was elected that, you know, the debt would be in 25, it would be 40 trillion. It was 20 when he took over, Trump. And now we're on the way to 40 trillion. I'm absolutely convinced with the federal US debt. And we'll see the same in every country. So we are on the way to you know, the central banks are doing what the only thing they do is to print money. It worked actually in 2006-09. It shouldn't have worked, but they managed to print enough of worthless pieces of paper to flood the market with, and people believed it for a while, and markets have continued to go up. But I think this time it will not work, because the amount of debt now will have that is printed will have no effect whatsoever, and that's why I think, sadly, this is going to be at the end of a major era.
It has an effect, at least on the gold price and on the prices of many other commodities. There are other reasons why those are rising. We come to this at the end of the video, but now I'd like to show our audience an interesting correlation between the Fed balance sheet and the gold price. And just today, you probably saw it, gold is up $20, and the correlation is working again, and maybe it will overshoot as it did many years ago. Here's the graphic.
Jan, let me just say, yes, it's up in dollars, but you know, more importantly for the audience that we are talking to here in Germany and in Europe, gold in euros is making new highs today. It's at 1,580. I'll see the price right now, 1,587. And remember, the previous high in 2012 high was 1,380. And at the beginning of this century, gold in euros was 237.
I remember that.
We're now at 1,580, so we're up 7 times since the end of '99. So you know the dollar is just a little bit behind. You mentioned gold in dollars because it's not made new highs yet, so that's going to come. But you know, in every other currency, gold is up. So yeah, gold is showing the world the effect of what governments are doing. Definitely.
So Egon, let me show the graphic that I have prepared. Here is it, the Fed balance sheet. It's a chart that goes back to 2003, and it starts at 100%. It's percentage changes. And we see that in 2008, with the big banking crisis, the Fed balance jumped by 200% or so. And here gold had an overshooting, and now the Fed balance is running up, and I expect a big move in the gold price, much bigger than we see today, to close the gap. Your take on that, Egon?
Yes, Jan, but we have looked at many similar type of graphs, and this, you know, obviously shows this graph that gold has been lagging behind since 2013, basically, when it started coming down. And now all of a sudden, yes, gold is starting to go up again, but you know, as you see here, and as you say, we have a long way to go. I mean, look at the way the Fed balance sheet is exploding, and that's just the beginning too. So you're absolutely right. Gold will reflect what's happening, you know, on the monetary scene, i.e., the money printing, and you know, gold will. You never know how many zeros you have to add to gold in the end. It depends on what level of inflation we have. But you know, and as you know, we're not looking at gold from the point of view how much will it go up, what level will it reach. We're looking at it from the point of view of wealth preservation. You buy and own gold to protect yourself against the total destruction of asset prices and of the financial system. It's an insurance. That's why you're buying it. And of course, gold will reflect what's going to happen now in the next few years. And therefore, and gold has been held down dramatically around the world by central banks and in the paper market. But they're going to lose that battle now. And therefore, we will see gold going up substantially. But again, there's no use talking about how much it goes up. It's more important to talk about how that you're actually needed to preserve your wealth and insure against all the things that will go wrong in the next few years.
And more people recognize that they have to do something to preserve their wealth. And together with this Corona madness, we had the strange situation that you cannot buy physical gold and silver. The shops are closed. There is the gold price is now coming under pressure from two sides. The supply is plummeting and the demand is increasing. For the supply point, I come back to this in a few minutes, but we see that the more and more investors are flying into gold, and the convenient but maybe not the wise way is to do this over ETFs. They are liquid and can be easily traded, but many of the refineries, you know it, you are in Switzerland, they are closed and they start slowly. The ETFs have a dramatic increase in their volume. I showed two graphs quickly, and then we come back to this topic. Egon, here we see the quarterly inflows in gold ETFs. I got this from the World Gold Council, and they have the data from, I think, from the most ETFs, or they have the best summary of data. We saw alone in the first quarter an inflow of over 300 tons. You see, it correlates with the gold price, and yeah. If there is no gold available, where do the ETFs get the gold from? I have my doubts, and you said this several times in the past. You also doubt they have any gold smells again.
Jan, you know, as you said, we've talked about it so many times. I mean, I tell people, don't own a gold ETF. That is, you're not protecting anything with a gold ETF. You're not holding physical gold. You're not outside the banking system. You don't have access to your asset. So, I mean, it's a waste of time. And furthermore, all of this increase in the ETFs that we see here, in their ETF gold holding, you know, that's happening during times when, number one, the refineries were closed for part of this time, and you couldn't get hold of physical gold. And also, even when we talked about this last autumn, ETFs were increasing their holdings of gold. But yes,
this is the total holdings of ETF gold, Egon.
Yeah. So you know, it's just over a trillion, $1.8 trillion dollars. Sorry, no, sorry. In all, 2,500 tons. Sorry, I'm looking at just over 2,500. Almost 3,000
tons now.
Yeah, almost 3,000 tons now. So, but you know, I know from the refiners that every time that the ETFs increase their gold holdings, there is no buying from the refiners. I don't know if they have any gold of their own. They probably have some gold of their own, the ETFs. But what they do is they just borrow from the same custodians, like like HSBC or JP Morgan, they borrow the gold, and these custodians lend, they hold central bank gold and they lend that out a few times to different funds, to different people. So that's gold has been used more than once, probably 2 or 3 times, to go into the holdings of the ETFs. So, therefore, they don't have 100% gold backing. I'm absolutely convinced. And furthermore, if you ask, there was a recent article, you can read again, of one of the senior executives of GLD, the biggest gold ETF, and he said it's virtually impossible to get physical delivery of gold from if you have a holding in a GLD. So, you don't have access to gold, and it's not 100% gold backed. To what percentage, nobody knows, because they can hold paper gold, and they can have just commitments from others that they like bullion banks, that they will deliver gold to them, but they don't have them now. So, that is ETFs. It's a piece of paper that maybe reflects the change in the gold price. But if you really need it, and if something happens in the banking system, you are not going to get any gold, and you don't have access to it either. So please, I tell people, don't hold ETFs. Whoever the issuer is, don't hold ETFs. Own your gold directly, physically, that you also have access to.
That's a keyword, Egon. I mentioned already that we had really difficulties to get gold from big Sparkasse, Landesbank, and so as you just mentioned, gold to get is really difficult, and maybe it's not just because of the Corona panic, but they also do not want people to protect their wealth. What if a wealthy investor with a couple €100,000 or dollars wants to invest now? You just said he should avoid the ETFs he is in the banking system, and we cannot trust the banks first. And secondly, if there is anything in their walls, could you serve this demand? Is your company right now able to meet this demand if you get big clients wanting to invest with you?
Jan, yes. I mean, when they were closed, the refiners, because the Swiss refiners in Ticino, in Ticino, the Italian part of Switzerland, they had to close for Corona reasons, because they're on the border to Italy, and they had a lot of cases. So the local government told them that they closed. Now they've been allowed to open again under certain conditions, so they can only produce they're running at about a quarter of normal production, so very, very low production. Of course, remember that the 3 Swiss refiners in Ticino, they represent 70% of all the gold bars in the world. So that's a big shortfall there. Now we were actually able to buy even when they were closed from other sources, and now we have access to. Because we have a very good relationship with them, we're working directly with them, we buy straight from them. So we can buy much bigger amounts than you mentioned. We can buy millions for investors without any problem. So we are fortunate, but overall, yes, there is a shortage. There's a shortage, especially in the retail market, or smaller coins and smaller bars, etc. But as you know, if you deal with the right people and you have good contacts and like ourselves, we can actually still get hold of gold. But for how long, Jan, who knows? Because when demand really increases, and it's on the way now, this demand can only be met by much, much higher prices. And that's going to come, absolutely guaranteed. It's happening already.
Egon, we are at the end for today. 4 weeks pass quickly, but so much can happen. I have no clue what topic will be the next one in a month's time. We can expect anything. I hope that those measures that bring total economies to their knees will some shortly be lifted, because it cannot continue that way, or we have a total collapse. As I said in the past videos, people, get your stuff as long as you can, not just gold, and look around, be critical, and do not buy everything that you get from TV. Some final words, Egon?
Yes, Jan, this is a disaster for the world. And of course, as we just mentioned, the coronavirus was the catalyst, but it's not the cause of this disaster. The cause is the asset bubbles in the world that now have to be corrected. And therefore, even if coronavirus now, if the cases come down or even partly disappears, I don't think it will ever totally disappear, but if it comes down, that's not going to change. We have now changed the world economic situation. We have now started a serious downturn in the world economy, which, as I said, most probably will end in a depression or in a hyperinflationary depression. So this is, people should now prepare for this for the very long term, as you say. And not just, obviously you prepare with your money and also protect yourself with whatever you need, from the point of view of food and other goods. But and then times are going to be difficult, and a lot of things are going to change forever. Travel is going to change for a long time. And of course, even the way people work, people now discover, which is a good thing. People discover now that you can work from home. A lot of people work from home. It works actually. So that's a benefit. But that means that the whole of the commercial office sector, etc., they're going to have a terrible time. Hotels are going to be a terrible time. I've done many webinars or interviews like this that we do now. I've done many webinars with many participants. And it works extremely well. And before people travel all around the world to go to conferences, now they can do it over the internet. So lots of things will change, for the better, you could say, but the whole industries will disappear. So we are going to have tough times ahead. And we didn't talk about unemployment, but unemployment now is at depression levels in many countries. Depression at the 30s level, or even worse. And that's not going to change overnight either. So just people, I say to people, prepare yourselves, but then remember that at some point this will pass too. And in the meantime, we'll just have to spend more time with family and friends. Which
is a good thing.
Yeah, well, absolutely. I think a lot of people have discovered that now, that, actually it's not bad to start, spending more time with family and friends and I said, and work from home. But of course, that's for the ones who have an income. For the ones who don't, it's going to be very tough times, Jan.
Thank you for today, Egon. Stay healthy in Zermatt. And we continue working from home and telling people the truth, because this is the only way for us, right? Till next time, yes. Egon, it was a pleasure to talk to you. Stay healthy and fit.
Good to talk to you. Thanks very much. Thank you.
Bye-bye.